Good evening. While Indian IT is finally starting to talk about AI revenues publicly, Accenture has just decided to stop talking about them altogether. Yes, in its latest earnings call, Accenture said this quarter will be the last time it reports AI revenues and AI bookings separately. Not because AI growth is slowing, but because, in their own words, AI is now embedded across nearly everything we do. And if you feel like this changes the script on how tech companies have been signaling AI success, it absolutely does. But let's unveil what Accenture actually said and why it matters, and why this one decision could redefine how every major IT company, including Indian giants, reports AI going forward. But before that, as you know, please like, share, and subscribe. This is Front Page by AIM Network. Let's go. Accenture reported a strong quarter, $18.7 billion revenue, $20.9 billion in bookings, operating margin stable, AI demand driving growth across consulting plus managed services. But then came the bombshell line. This is the last quarter we will report AI revenue separately, end quote. This was said by Julie Sweet, the CEO and chair, Accenture. So what Julie said means this. Accenture believes AI is no longer an initiative. It's not a product line. It's not a segment. It is now infrastructure, process redesign, security, transformation, revenue growth, and cost efficiency everywhere. And here's the important nuance. Markets love AI visibility. Investors like seeing AI numbers broken out. Competitors are just starting to share AI revenue to look future ready. Accenture is saying we are past the hype stage. AI is no longer something to brag about separately. It's simply how we do the business now. That's bold and, well, slightly controversial as well. But the confidence comes from the numbers behind the decision, which is before Accenture closed the AI books, it left us with one last reveal. To date, Accenture has delivered this. $11.5 billion in AI bookings, $4.8 billion in AI revenue, 11,000 AI projects, 1,300 enterprise AI clients, over 3,000 reusable AI agents, approximately 80,000 AI plus data professionals. Well, you know, this is the industrial scale AI monetization. And Accenture's message to the street is very clear. AI hype is over. Enterprise AI is now an annuity engine. And interesting is the fact that this is not just earning stock. Accenture is backing this strategy with one of the strongest AI partnership ecosystems in the world, expanding deep outcome-focused alliances with Palantir, Anthropic, Snowflake, OpenAI, and even national-scale programs like the US Department of Energy's Genesis mission. So from building AI-powered decision intelligence platforms to transforming regulated industries to designing the data center backbone for the AI era, Accenture is turning AI from a tool into infrastructure. Julie Sweet also made another critical point that grounded everything. Consumer AI is instant, enterprise AI is not. Because, ladies and gentlemen, in the real world, data isn't clean, governance isn't ready, cybersecurity needs reinforcement, workflows need redesigning, digital cores aren't modern enough. So Accenture is selling readiness, confidence, transformation, and outcomes. And the clients absolutely agree because here's another striking shift. 60% of Accenture's work is now fixed price, up 10% in just 3 years, meaning Accenture is taking delivery risk on itself in exchange for trust, stickiness, and non-linear revenue upside. That's the way one creates durable AI business models. So unlike others who keep hoping discretionary technology budgets magically return, Julie Sweet made it very, very forthright. They are done waiting for macro tailwinds. Growth has to be engineered, not prayed for. So Accenture is, in a nutshell, pushing AI adoption, expanding cybersecurity, leaning harder into APAC, which by the way grew 9%. And yes, very quietly entering the data center consulting business via DLB Associates. Very similar to TCS's Hyperworld bet. Except Accenture is doing it in a more advisory-led, asset-light way. And this is the part that genuinely matters for us. Because just days ago, we mentioned to you TCS publicly declared $1.5 billion AI revenue over 5,500 AI projects and a very bold ambition to become the world's largest AI-led tech services company. So in fact, TCS openly said it will be AI first even if it cannibalizes revenue. We said it then. The AI battleground is shifting from PowerPoint promises to measurable execution. Accenture has now raised the bar further, not just delivering AI at scale, but making AI so deeply embedded that reporting it separately becomes meaningless. And of course, that is a new benchmark. So in conclusion, as always, the front page take, Accenture just sent a very loud message to the world, which is AI is not a feature, AI is not a department, AI is the operating model of the enterprise. And that shifts the question for the industry completely. It's no longer who has the biggest AI revenue line item. No, it is now who can operationalize AI so deeply that it simply becomes the way their business runs. TCS has declared ambition. Infosys, Wipro, HCL Tech, Cognizant, all will now have to respond to this standard. Because if Accenture just normalized AI, the real race now isn't who has AI. It's actually who can move fast enough to keep up. And in the coming months, as Infosys, Wipro, and others step into their next earnings season, the street will expect a response. AI-embedded strategies, clearer adoption maturity, outcome-based delivery signals, and stronger execution proof points, because the benchmark, as I mentioned, has officially shifted. This, ladies and gentlemen, is Front Page by AIM Network. Like, share, subscribe, and always remember, think AI, think AIM.